The market's crashing. The sky is falling. There is no fun to be had in real estate anymore. Everyone has lost all of their money. Recession is imminent. And of course, you need to fire sale all of your properties immediately if you have any hope of surviving the next couple of months or years ahead.
I'm buying.
We're buying. So I'm Cody Walker with eXp Realty. Dan Max with eXp Realty. We're joining together today to talk about a couple really important topics that are hot on the news today, and are going to explain a little bit why what I just said is not true and why we should have a little bit more optimism in what's ahead of us. There's some serious opportunity ahead if you just pay close attention, do your research, your due diligence, and find the right people to partner with. So Dan, what are we talking about today?
All right, first off, let's start with lending standards, because I wanted to start with the comparisons between 2008 and 2022. We'll go through a lot of these different topics, but we'll try to compare them because a lot of people seem to have forgotten what happened in 2008.
So what were the main things in 2008 that led to this?
Okay. I thought personally the lending standards, because at those times you had 0% down, no documentation, didn't really dig too deeply into your finances. You could pay a little higher interest rate, kind of like you can now, no doc loans, but those were very prominent.
Okay.
And unfortunately at those times, the subprime mortgage standards, huge. Everyone was underwriting them. So high interest rates, the banks loved writing them. Well, guess what? You put people in houses, had nothing into it. Well, guess what? When home prices started dropping just a little bit and they had buyer's remorse, they're gone. They walked away. Now, what do you think in 2022? How would you compare it, right?
Right. In 2022, we have high standards for lending. Takes quite a bit to get a loan.
Yep.
Right. We have a supply-demand curve that's in favor of a strong market.
Yep.
Right. We have higher interest rates now than we had previously, but still attainable to purchase a house, knowing that it's a temporary mortgage rate.
Yep.
And what else?
I mean, we talked about this. 45% of homes in the country are owned outright, no mortgages. Well, back then, guess what? Everybody was literally buying houses with nothing down, nothing tied to it. It was so easy to walk away. So it's kind of the waterfall effect. Mm-hmm. Well, it was based upon supply and demand. Like you said, we have strong dynamics.
And I want to point out too that while we do have 45% of homes paid off cash in the U.S., a lot of people are asking how many of those are owned by corporations like BlackRock. The answer is about 2%.
Yep.
So not a tremendous amount in the grand scheme of things. That is a ton of houses owned by a couple of corporations. But in the scheme of things, out of over 40%, to have only 2 of those owned by corporations buying cash, it's not a catastrophic number if something were to change, if they were to fire sale and flood the market.
I'd be buying.
Yeah. and the rents right now are high enough where it's okay. It's going to sustain a long-term hold for them, hypothetically.
Yep.
So what else we got, Dan?
So the next topic, again, kind of related is inventory and foreclosures. Obviously, the foreclosure rate was much higher. Mm-hmm. Well, you had no equity. Well, foreclosures were going to be incredibly high. Well, now what? Everybody has equity.
Everyone's got 43% in the last 2 years, roughly, according to some sources, right?
Yeah. So why would you foreclose? You do not need to be in a fire sale position based on, again, if you owe $250,000 to the bank, your house is worth $700,000. Say you do have economic issues personally. Are you going to foreclose your house and just dump it? No.
I hope not.
No.
If you do, call us. We'll buy it.
Yeah. So those factors have completely changed.
Yeah.
Next, let's talk about the cause of the recessions. They're totally different.
Okay. So 2008 versus potential 2022, 23.
Yep. 2008, the whole reason for the recession was a housing bubble. Mm-hmm. Will we not agree 2022 is a different type of recession? It's from what? The after effects of COVID spending, government spending, having to raise interest rates. It's not a housing bubble.
Yeah, it's multifaceted problem that'll be attacked from a couple different angles, and hopefully isn't just from a couple of bad lenders, right?
No, exactly. And I think the difference between now and then too is the markets in themselves don't always go up in a straight line.
Mm-hmm.
They correct. Well, naturally, in like the seasons, you go from the summer to the fall to the winter. Now you're into the fall, maybe the winter of housing, and a correction different than a bubble.
Mm-hmm.
Naturally, it's just the prices can't sustain going up in a straight line. I don't think anyone wants that.
No, I mean, it would be great if you were a cash investor, right?
Yeah.
That would be fantastic. But ultimately, our wages aren't keeping up with it.
No.
Inflation's rising, right? We have to pivot somewhere
Yeah.
for it to make sense and have people make a safe investment without just hemorrhaging cash.
Yeah, and so that's where the difference is. Like, one was literally a housing bubble. Now it's just, okay, a correction of the market, the economy. You spend a lot of money during COVID to try to sustain businesses. Well, you pull the money, some of it out, you get back to normal times. Well, it's like having a coffee. Everyone gets amped up, and then things come back to normal. Like, that's literally what's going on. So,
okay.
Next topic, I think we need to talk about the housing demand sustainability. 2008, fix and flip bubble.
Okay.
Literally.
Yeah.
Everybody trying to buy a house. Everyone's trying to flip it immediately.
Sure.
Do you think that's going on now?
I think it's a pretty saturated market. There's still a lot of it happening, but with higher interest rates, it's starting to slow down.
Yeah.
Right. So that's going to slow down. It's been picked over and turned over quite a bit over the last 10 plus years.
Yep.
Right. It's become a lot more popular with some of these big fix and flipper, wholesaler, real estate investor courses. Everyone's doing it.
Yep.
So it is huge, right? There's a huge market for it. But people understand with the equity that they have that they don't need to follow that route as a seller.
Yep.
And on the buyer side right now, there's limited opportunities because people know what they can get for their homes, right? They're better educated for the most part with access to information.
Yeah. Well, also too, the inventory differences we've talked about. 25 million homes built from the 70s to 2008. Well, in the last 10 years, 5 to 6 million homes. Not a ton of inventory. Not a ton of inventory to fix and flip. Mm-hmm. And then you also, like you said, BlackRock. You got institutions buying. So there's like these natural supply demand, economics going on that keep the supply, I think, ultimately from getting crazy. Because ultimately, if there's way too much supply, that's the problem. Are you seeing crazy high supply in Denver in the markets you're researching? I'm seeing an increase, but it went from literally almost nothing.
Right.
Which seems like a big increase.
3 to 5 hours to 3 to 5 weeks. Right. I mean, realistically, our neighborhood went from you list a property on Saturday morning, it's sold by Saturday afternoon with multiple offers. And now we have, 3 times the amount of homes active as we do pending. Right. So there's still a good number of homes pending, a safe amount compared to what's active. But there is opportunity and options for buyers, right? We're not making rash decisions over a few hours of time on your biggest investment. And homes are still selling for good prices after 60 days on market.
Oh, yeah. Wouldn't you say it's more of a balanced market?
Yeah, right. And
historically
speaking, even 7 years ago when I got licensed, there was 2 to 3 months of inventory. And nobody was losing their mind. They're just doing that now because it's new, it's different, and it seems like it shouldn't be, although it's what people are used to, right? Interest rates, yes, they're high. We've seen it before, right?
My first mortgage was at approximately where things are today.
Housing prices are a lot more expensive though now, right? There's some other factors that make it less desirable to pay 7 or 8%, but we also still have a sustained appreciation in the market.
Yep.
I don't think we're going to see those measures that we saw before.
Gotcha. Let's talk about market volatility. Let's talk about the differences in how, say, markets like Denver, Florida, certain parts of the country enact. Like, what is your thoughts on that currently?
Yeah, so each market has its own draw, right?
Yep.
So Denver, you have a hybrid market. So people are moving here from states like California and New York. We've got a great quality of life. We have industry here, several large industries, universities and hospitals and oil and gas and technology and you name it, right? Recreation and tourism. There's a lot that draws people in here, and people are able to move from these other states because of their hybrid work. Right. Then you have states that grew huge in Austin in Florida. Right. People are moving there to retire. It's cheap, or they're just selling their cash cow in California or Colorado and moving to one of these southern states that's maybe less desirable to live in for most people, but they can buy a property for a quarter of the price, right? That's going to start to change as well because of interest rates and because of other factors in the market. And then the other one we have is going to be some more places like Nashville, right? So places like that are a big draw for tourism and recreation, and that's going to start to shift as well.
Well, this is the thing, and especially in 2008, you saw the second homes, the vacation properties, probably gets lumped into now Airbnb because you didn't really have that then. Those property prices might be a little more volatile, naturally, because they're not single-family housing. They're more of an investor.
It's a business.
Yeah, they're business more. They're more business related. So if business and housing economy slow down, they're more going to be more affected by it, obviously. But vacation homes, second homes, if people actually do go into a pinch, saw this everywhere that was very strongly vacation home, but
first thing to go.
Yeah, it's the first thing to go. Yeah, you're not going to sell your primary residence. You're going to sell your house in Jackson Hole. You're going to sell your beach property. You're going to sell your mountain house. Like, people have to be thoughtful of that, right? Like especially when they're looking at prices in certain areas. Like, for example, it's probably better to wait for places that are in these second home dynamics versus, all right, if you're looking for a primary residence, it's probably the best time to buy is when? Now, yesterday, last week, essentially everyone says 3 to 5 years ago, I wish I would have done that. Well, here's now, here's your opportunity. You actually get some discounts.
Right. Yeah. Discount real estate's the best real estate. Second to free real estate. Right? But there's also opportunities for free real estate right now with creative financing options.
Do you want to talk about that?
Maybe another video will do that.
Okay.
But there's a ton of opportunity when the market starts to shift. That's when the most millionaires are made. Right. And it's looking at opportunity rather than loss. Right. So you could look at all the headlines right now and see all of the quote unquote catastrophic things happening all around you, high rates and more properties on the market. They're sitting for longer, less mortgage originations than years and years in the past, right? There's a lot of negative news headlines, but the people that seek out opportunity are the ones that are going to win, right? The ones that are buying real estate now, knowing that in 5 or 10 years, the prices are going to be through the roof and interest rates will be lower and they'll be cash flowing and sitting on equity, right? Those people are going to make a ton of money, whether they're living in the properties or house hacking, living in part, renting out another part. Great option during a recession. Everyone needs rent. Rent increases. So live in part of it, rent out a room or two to your friends, or just buying a straight out investment, right? You might make $100, you might lose $100 a month or a couple $100 a month, but ultimately the prices will go up. Ideally, the rates will go down sooner than later. And really, real estate's always been an opportunity, right? It just depends on what your strategy is and how long you intend to hold it.
Well, me being in finance and being investing, like the difference between real estate holding periods and stocks, bonds, particularly certain municipal bonds, government debt, you got to be careful because the market volatility and those things change and can affect when you need to cash out. In general, with housing, as we've always seen, people need a place to live. They might not need Apple stock. They might not need Bitcoin. They might not need Tesla, whatever name of the asset you're talking about. People need places to live. And that's where the diversified portfolio, if you're not in real estate and have zero real estate exposure, I think people, you see it all the time. I've seen more millionaires made out of real estate consistently than people speculating on a digital currency and hoping to get lucky. Now that happens.
Sure,
Short term. But more people made millionaires through real estate.
Right.
Every wealthy person I know has tons of houses.
Yeah, right. They have a lot of real estate. It's stable.
Yep.
And for the most part, right, unless you just bought $0 down. For the most part, real estate is stable. It's a good long-term asset. There's tax benefits to it. And, if you just seek out the right information, become an expert in one area, it could only take you a few months to make a significant amount of money, to make 6 figures in your first year, even as a side hustle, let alone making a long-term plan for you and your family.
Oh yeah, think about the perspective. If you can research a market that you live in or frequent often, and you know the prices, you know the long-term potential, it's easier to research the potential for a house than a stock or a company because the CEOs, the accounting, all the stuff on paper looks great, but you don't know how it's going to act in a recession. Well, people always need a place to live.
Right.
Keep it that simple.
And you think about a city, right? A city plan is done about 10 years in advance.
Yep.
So you know where the boundaries are being moved to, you know what infrastructure is being put in, you know generally a few years in advance of the big industry coming in
Yep.
and putting down roots of billions of dollars and having tens of thousands of people move there, right? Some of these factors and additional ones, tourism in certain places, you know, like right now, Lake of the Ozarks is blowing up.
Yep.
Right? From a huge increase in tourism, just one of many. You can see that stuff building years in advance.
Yep. It's just it doesn't happen overnight, so that's why people don't think it's as desirable.
It seems
as
like a
flashy.
gamble,
Yep.
right? It seems like a gamble like stock, but you just look at the facts.
Yep. Well, let's end it with the recent news headline, because I think a lot of people have seen this come out and they're like, OMG, right? Second largest price decline since the Great Depression. From May to August, house prices drop on average 6 to 10%. Do you want to talk about what the prices did in the spring or the last couple of years in general?
Yeah, I mean, over the last 2 years or so, we've seen, depending on the sources and where you're looking, about 45% increase in housing prices in 2 years.
Yeah.
Just over 2 years. So you look at an increase of near 50%, and then you see a decline of 20, right? Or even 15, 20, depending on your market. Some are still appreciating and going higher, right? So,
the rents are going higher.
Rents are up 20 to 30%. Our neighborhood rents are up over 30%, almost 35% in 1 year, right? So I think it's hard to look at that and see too many problems, right? If you still look at it and say, yeah, I could have sold my house and made 40% gain, but if you forgot that happened and you made 20% on your house in 2 years, it's pretty dang good. I mean, what other investment makes 20% without doing anything, right? In your trading, right? If you just let it all sit there, are you going to make 20%?
Potentially, maybe. But the thing that people neglect, tax advantages, this 20% in-house, you can bypass either with 1031s or exchange, for investment properties, or if you own it as a primary and you lived in it, 2 out of 5 years, there you go. If you make 20% in the stock market, it is not 20%.
Yeah.
Or it is, you're going to take a significant
tax hit.
Yeah, tax hit. Your housing, if you do it well, you plan it well, you speak with professionals, you can figure out ways to not pay taxes. That 20% is real.
Yeah. So bring it all together. We don't expect there to be a huge recession, but there will be a correction. There already has.
It started.
It's already happened.
It's great. Great time to buy. People complained about prices going up and overbidding. Here you go.
Right. Take advantage of a short-term decline in prices. Buy a deal, and as we've said in previous videos, date the rate, marry the home. Right. So buy a great investment that you plan to hold on long term.
Yep.
And anticipate a couple of years, hopefully at worst
case,
of high interest rates, but bank on 5 figures of appreciation, where you're only going to lose maybe a couple $100 a month extra mortgage payment, but gain $50,000 instead, right? If I lose $500 a month but make $50,000, that's okay for quite a while. That's still a really good investment, because I don't have almost anything else in my life making me that kind of money.
Well, think about it too. You're actually paying off an asset that is worth something. You're not buying a paper company or a paper stock, or or a cryptocurrency.
Yeah, worst case scenario, right? Worst case scenario. And if it's an investment property, you have tenants paying your principal and interest on that property, building your equity bottom line, and you do that for 20, 30 years, you have a cash flowing investment that's going to take care of you forever.
It literally will help you get to retirement quicker, because it will become another source of passive income versus, say, your 401k, your IRAs and stocks, which are you can only take them out at certain times of your life. They're going to be taxed. No guarantees.
Yeah, and with fix and flips dropping in popularity right now, that's more opportunity for someone else like yourself to come in and build equity on a primary residence, buy something low, fix it up, and sell it when it's high, or refinance it and turn it into a rental, right? That's a long-term strategy, but there's more opportunity opening. And Dan, anything you want to close with?
I was just going to say, if you have any questions about this stuff, please reach out. I think real estate, just like any other investing, is an information game. What you don't know seems scary.
Yeah, absolutely.
And if you don't know, then of course the headlines are going to drive your emotions to how you feel about it versus let's talk to somebody who's done this. Let's talk to Cody who's in this market. Let's talk to Dan. Somebody that you trust to give you really good information, because ultimately the most amount of millionaires, billionaires built their foundational wealth on real estate.
Yep. And the key is information, right?
Yep.
Seek out the right information from the right people. About 80% of realtors have only sold 3 or fewer homes this year, which is astounding. So I would seek out some other people that are in the industry, people that have their finger on the pulse of what's happening, people that own investment properties, people that invest, that understand the big picture and what's going to be happening and can lead you in the right direction, help you make those decisions, and help you build out your real estate future.
Well, Cody, great chatting with you.
Yeah, you as well, Dan.
Let's do it again.